Trading stocks, futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time.
What's up, traders? Hey, everyone. Welcome back to the channel. So today, I'm going to be doing something new, something I haven't really done on YouTube, but we're going to be diving into one of the newest ETFs that's been just getting a lot of attention, and it's the Roundhill WeeklyPay Universal ETF, and its ticker symbol is WPAY. WPAY. And if you've seen people hyping this online, you might be wondering, well, what is it and how does it work? And is it worth considering for your portfolio? So stick around because I'm going to try to break it down for you. So the reason this is a little bit different for me is I'm conducting kind of a test. So I've been a trader for about close to 15 years. I started around the financial crisis, 2009, 2010. And I'd say for the last 8 years or so, I've been pretty much predominantly a day trader. But now I am approaching that age of, well, let's call it getting older. In April of this 2026, I will be turning 60 years old. I have been reducing my day trading down for the last year, where I am typically day trading the futures markets between 8:30 Central Open until 10:30, and I try to stick to basically a 2-hour window for day trading. But what I've been doing, starting going back about 4 months ago now, in the summer, is starting to look at making a passive income from dividends, from covered call strategies, from me doing covered call strategies to ETFs. And in the last 3 months, I've learned so much that there are so many new ETFs, covered call ETFs, that just simplify things and just take the work load off of you of doing weekly strategies or running your own wheel strategy where you're selling cash secured puts, then having to buy the stock, doing covered calls, then having it taken away, and just kind of spinning the wheel. That these ETFs just seem to take a lot of the headache away. And I shouldn't say headache, because it's a passion. It's even fun to do. It's just fun to beat the market. But when you get to my age, I'm starting to think, 60 next year, it's time to slow down, really start just generating income and just enjoying life. So, with that said, I've been experimenting the last 3 months with covered calls ETFs and have done extremely well. I posted on Twitter. You've seen some of my posts in my Discord. I now have a new channel called Passive Income, and I posted a lot of the stuff in there, and I'm up about 8% more than the S&P 500 the last 5 months, and generated some really nice income on top of it. But I'm still in that testing phase, and so I've been using Robinhood quite a bit, and I love absolutely the brokerage Robinhood. And I've been like also use Charles Schwab for some things, but there's a new company. I don't know how long it's been around, but I've been seeing people promote it a bit, and it's called public.com, which is, to me, it's like Robinhood. Basically, it's the same, almost the same stuff. The website almost looks identical to the same, but I wanted to test something, test what is the platform Public like, and I wanted to open an account in Public and really test something that is new, which is what I'm going to go over, which is this WPAY ticker symbol from Roundhill. And it launched, this ETF launched September 4th, so it's relatively new this month. And the ETF tracks basically all of the Roundhill WeeklyPay Universe Index. But before I get to that, I think you can see on the screen, I opened this account this last week with $20,000, and I have a margin account, so I have $40,000 available to me to test some things. Now, this WPAY that's out there, I can't use any margin on it, so I can only get $20,000 worth of it. But I may be able to still margin some other stock for a test or something. But we'll cross that road when we get there. But what I want to do is every 1 to 2 weeks come back, show you this portfolio, what's going on with this, and I just want to teach and show people that you don't have to take your money and throw them in certificates of deposits, stuff it under a mattress. You can do so much today, so easy, using these cover call ETFs and ETFs in general. So let me go to this Roundhill WeeklyPay. And these are what's called the weeklies ETFs. So these are the current weeklies that they have, and they pay every week. And I may need to do just a video just on these weeklies itself and how this works. But essentially, it's sort of like a leveraged ETF where they are trying to get back 120% of the actual gains of this stock and paying it back to you every week in a form of a dividend, or what we call really a distribution, but the terms we use, it's called like a dividend, the way it's paid out. And so we have these weekly pays. And so it is following Apple, AMD, Amazon, all these. Here's Berkshire, Coin, Google, Robinhood itself, Meta, Microsoft, NVIDIA, of course, Tesla. And each of these are individual ETFs. So if there's a stock that you really have some, really want some upside, like this Palantir stock ETF has, been through the roof. This is a real good thing to potentially look at and use. Now, I've been using an ETF called OMAH, which is also, it is not a weekly, it's a monthly Berkshire Hathaway cover call ETF. And I'll probably do something just on the OMMH. But so what this new WPAY is doing is it is essentially taking all these right here and putting it into one big giant ETF. And so it feels as though that also helps reduce the risk of some, because, hey, if, Robinhood CEO steps down tomorrow and you're in Robinhood, that stock's probably going to take a hit. But if you're using this WPAY, which is the conglomerate of all of these, maybe so much that one Robinhood stock, if it takes a hit, still going to be just a smaller risk in that total portfolio of the ETF. And so this WPAY, it's kind of interesting because it's designed for weekly income. And as you're aware, probably most ETFs and most dividend stocks pay quarterly. We have a lot now that do pay monthly, and these have come out in the last year or so. But these weeklies are really, really, really new. So this WPAY offers a lot of diversification over all these very, high profile stocks. You got the Mag 7. You can almost call this how many we got here? 1, 2, 3, 4, 8, 12, 15. Maybe this is the Mag 15 or something, also right now they are waiving the expense ratio for this ETF until the end of September. So that's also a good thing. And yeah, are there risks? Yes, they're the risk. If the stock market takes a crash, then these stocks in the NASDAQ are probably coming down as well. So this is not a foolproof, system for this at all. But I'm testing. I'm still young at 59, even though I'm turning 60. I still have several good couple years ahead of me of trading, so I can still continue to put money in. And so now is the time to do that. So what I am going to do is, in this portfolio of 20,000, tomorrow morning on Monday, I'm going to buy as many shares as I think I can get. Roughly, it's going to be between 300 and 350. And it will pay a weekly dividend. Matter of fact, this WPAY goes ex-dividend every Tuesday. So you need to own it on Monday. The dividend gets distributed on Tuesday and paid out to you on Wednesday. I believe that's how it works. I will find out because I'm going to be buying it tomorrow. And ex-dividend is Tuesday. So therefore, I should get this week's weekly distribution if I buy it tomorrow. And we're just going to see how this compares to the S&P and the income that it generates. And I'll probably continue to add. What I'm going to do is I'm not going to take the dividend. I'm going to go ahead and just reinvest the dividends each week right now. And then every month, I'm trying to decide if I want to deposit, say, an additional $5,000 into this account each month and buy another 5,000 shares worth, sort of the dollar cost average if there is a pullback in the market. So that's still to come, how I play this. But I want to start by just buying about 300 shares of this WPAY on Monday. So this whole covered call stuff is new to me. I've been experimenting the last 3 months. I've had some great success. If you follow myself on Twitter under Prolonged Wealth or in my Discord, you have seen where I've posted. And I still think my very most favorite covered call ETF right now is OMAH, as far as the balance and quality and the risk levels for me. But I still want to test some of these other things. So anyway, let's report back here on next week. I'll do the same thing. We'll see how many shares I got next week. We'll see if I've got my dividend payout this week. And I call it dividend payment because that's what we kind of know, but it is really just a distribution, back to the account. And we'll see if this test and experiment fits in. I'm going to do this to the rest of the year, and we'll report back our findings. So be sure to, if you want to learn more, join the Discord, which is in the link below. Post in the Discord every day. I post a lot of things. You can also follow me on Twitter at Prolonged Wealth, or I guess that's X. For some reason I still just call it Twitter, but on X at Prolonged Wealth. Take care, everybody. Peace out. Safe trading, and see you next week. We'll see what happens this week in the markets. Take care, everybody.